Hello, everyone, and welcome back to Options Arena. I'm your managing editor, Mike Merson of True Options Masters, here as always with Mike Carr, Amber Hestla, and Adam O'Dell from Money and Markets. Bit of a weird one this week. I don't know if you noticed, but the British pound kind of exploded, and a lot of UK pension funds got blown up, or were about to get blown up, or on the verge of getting blown up last week. It's been an incredibly volatile time for the United Kingdom in the bond market, in the currency markets, and of course in the stock market. It's spilled over into our equity markets the week it happened. So it got me wondering, what is the trade on the UK? We have a new prime minister, we have tax cuts, we have a lot of stimulus coming out. A lot of people are thinking we're going back to money printing. It's a huge pivot, and there's a lot to dissect with it and a lot of potential ways to look at the situation. So I put it to our True Options Masters to find us a trade on the UK. And this week, we're going to start with Adam. Adam, what do you see as our trade in the UK?
Sure. So I'll start with the disclaimer that I'm much more of an options strategist than a macro strategist. But if you do look at a chart of the pound, you could either look at the Forex cross, Great British Pound against the dollar, or there's an ETF, the Invesco Currency Shares British Pound. The ticker symbol is FXB. So we'll just use that. They more or less trade the same. But you can see that the pound has been having trouble all the way since mid-2021. So what's happened over the past couple of weeks is not new. But to me, most of that decline seemed orderly and kind of linear, whereas the sell-off really started gathering steam over the past couple of months. And then the last week or two, that last final sell-off was, in my view, something of a capitulation move. Again, I'm not really a macro strategist and don't want to get into the weeds as far as what's going on in the UK. But if I just look at this chart and get a feel for the sentiment and the psychology of a sell-off of that type, then I do think it was something of a capitulation move where most likely that late September, early October bottom is probably going to hold. So speaking of being an option strategist, there is an option structure that I like when there's a stock or ETF that I'm not necessarily confident is going to scream higher like a momentum stock, but that I believe that the bottom is in. And the advantages of this structure, which is kind of not a really well-known one, is that you can actually take a credit on the trade. So rather than paying a debit for the options spread, you can take in a credit, but at the same time, it allows you to have bullish exposure. And basically, the option structure is called a bullish risk reversal. So you are basically selling an out-of-the-money put, about a 20 delta, and then you are buying out of the money call. So you're selling a put and you're buying a call. Let me just pull up the option chain that I'm looking at. So basically here you'll see FXB has the March of 2023 expiration. If you look at the 20 delta strikes, you can sell the 100 puts for about $1.80. And then if you look at the calls at the 20 delta, you can buy the 120 strike calls for about 80 cents. And the reason that even though those are both 20 delta options, there's the put call skew. So basically in markets like this, especially when something's been in free fall recently, investors are a lot more willing to pay up for insurance on the put option side. So that's why you'll see here the implied volatility on the put side is 20% implied vol, whereas the implied volatility on the call side is only 12 or 12 and a half. So that's really why you can sell a more expensive option for about $1.80 and buy the less expensive option for 80 cents. So on this trade, if you sold the 100 strike puts and bought the 120 calls, you're going to take in a credit of $1 per contract. You basically, that credit is yours as long as FXB stays between 100 and 120. Basically, its range right now over the next several months. And then if for some reason this thing screams higher, those long calls are going to kick into gear and you have unlimited upside. So as an option strategist, that would be my way to play the tanking British pound at the moment.
Very cool, Adam. Very technical take on how to structure an options trade. One strategy that I definitely haven't played with before. It's something I'm going to look into a little bit more. Okay, let's kick it over to Amber. Amber, what do you see for us with the UK on the options or on the macro side?
Thanks, Mike. Okay, so I'm going to share a chart with you here. So most investors in the US will probably look at the UK ETF EWU and see prices down more than 25%, but that's because of the dollar. So there's an ETF that takes away the impact of the dollar, HEWU. So just like EWU, it's an iShares fund, but HEWU hedges the currency risk. So this is a chart of HEWU shown as the black line and EWU shown as the magenta line. The difference in performance is dramatic as the dollar soared in the past couple of months. So the UK economy does face challenges, but so does our economy. I think the new prime minister is doing the right things, shocking the system with tax cuts that should drive long-term growth while subsidizing energy bills that are hurting families. The average bill is expected to be about $300 a month for electric and gas, and that's up about $170 a month. So anytime something like that hits a family budget, it does require cutbacks. So the subsidies will keep the economy growing. So it won't be easy, but the UK economy could recover from here, and that should push stock prices up. So I'm not sure the bottom is in yet, but I'd be watching HEWU and buying as momentum turns bullish.
Very cool, optimistic take. Yeah, I am seeing some of those energy bills, being posted in places like Reddit. People really freaking out. Apparently they pay them quarterly. They're seeing like €500 or £500 quarterly bills. And yeah, that's got to be scary for some families. But good to know there's relative strength in the UK stock market. Speaking of relative strength, let's go over to a relative strength master, Michael Carr. Mike Carr, what do you think about the UK right now?
Thanks, Mike. I too am going to share some charts here. And I'm going to start with a chart of FXB. And this is the ETF that Adam mentioned that tracks the pound. As you can see here, we had that steep sell-off, but it recovered quickly. And Amber did a nice job explaining that a couple days ago in True Options Masters, our daily e-letter that's free. This selling was a technical nature. It was because of some pension funds being leveraged. Pension funds are supposed to be safe. For some reason in the UK, they are extremely leveraged. We see that sell-off almost completely reversed now. So it's like a non-event if you look at the short term. Looking back at the long term here, this is the Brexit vote, right? The summer of 2016, pound fell sharply, and it's been kind of stable there for quite a while. So we went from that range, we broke out to the downside. Question is, of course, where does it go now? It's really not a question about the pound, it's a question about the dollar. And the dollar is, we're right back to where we were here in early 2000. We're in an uptrend, strongest potentially since the early 80s. And in the early 80s, the dollar was king, basically, and that was a different era. We saw a revival of that in 2000 as the new economy was supposed to be replacing everything. I don't know if anybody here is old enough to remember the internet bubble from 2000, because the internet was going to change all of our lives. We were going to be able to shop on our phones, and that was really quite a stretch for most of us to imagine back then. It didn't pan out, and the dollar fell again. Question is, this time, are we going to see a continuation of this dollar trend? We're definitely at the point where we are in a global currency reset. And the pound, the first casualty maybe. The trade's in the dollar. And the way to trade the dollar is with the euro. You're going to have to trade a pair. The euro accounts for more than half of the dollar index, so that's a great way to trade it. This is a chart of EUO. That's a short euro fund. And it looks, if we zoom in, it looks quite a bit like the current chart of the dollar. We have that big rally, that pullback. So EUO, virtually indistinguishable from the dollar. If you think this reset that's going on now, the dollar is going to be the survivor, you want to be trading ULE. ULE is long the euro. So you're basically, when you're long euro, you're short dollar. We see the opposite reaction here. Strong, strong downtrend here. That's the big question we face. There's your trade. we are in a place where we're going to have a major global transformation in the currency markets. Is the dollar going to be king? If you think so, ULE's your trade. Is the dollar going to collapse? EUO. That's it.
I'm providing 2 options. I like this, Mike. It's almost getting me to want to open up my old Forex account. I remember making some good trades on the euro back during the pandemic crash. Yeah, fond memories. Not like this week, I'll tell you. But anyway, that's going to wrap it up for this week's Options Arena. Thank you so much for watching. As always, as Mike said, you should be reading True Options Masters, the greatest options trading e-letter in the universe. And you should be reading Money and Markets, where you can get more great stuff from Adam O'Dell. More options insights, more macro insights. We provide it all. If you like this content on our YouTube channel, be sure to like, subscribe, and leave us a comment on what you'd like us to cover next week. And that's going to wrap us up. Thank you all so much for joining me, and I'll talk to you next week.